Hey, welcome back. We're bringing you a midweek review. We've had the start of September. Quint, it's been a rough start to September, but then looking back at August, if you just look from August 1st to the end of August, it's like, oh, great month.
You know, it's funny. Yeah, you say that. I got my statements in the mail. All of our accounts, our family accounts, are at Schwab, just like all of our clients. And ultimately, I got my statements, and I didn't get them in the mail, in my email. And I looked at them. I was like, oh, it's a pretty good month.
Yeah,
and
drama.
I find that fascinating because if you were to fall asleep under the tree, little Newton, you wake up. Is that the guy who got hit by the apple?
Yep.
Okay. You wake up and you go, oh, it was a non-event. But obviously, in the beginning of August, we had some incredible volatility. I don't think September is going to be much different than that, candidly. Now, I don't know if we'll have the recovery that we had. September seasonally is traditionally a pretty weak month. Markets, a lot of people think October is the worst. Ironically, what traditionally happens historically is September is weak. We roll into October. We typically have big bottoms in October that set the stage for end of the year rallies, Santa Claus rally. Who knows if that's going to happen this year? There's so many other things at play. Obviously, we're rolling into an election. We have the Fed pivoting and changing their tune a little bit. But I think from our perspective, and you did a really nice job, I heard you on Jack yesterday talking about this, that the market is volatile going into elections. It always has been.
Yep.
We've talked about that. We did a webinar on that. We put up that great chart that shows that as you get closer and closer to the election with the uncertainty surrounding an election, that markets get volatile. Now, why is that? And again, you did a really good job. The reason is yes, there's uncertainty and people want out, but as different candidates lead in the polls, different companies do better.
Yeah.
For example, if Kamala starts to really lead in the polls, well, energy companies, fracking, big tech, things like that are not going to be favored, right? What would be favored? Well, you have your alternative energy companies. You have your, very, green, if you will. I don't know. I mean, I'm doubling down on some things, but basically you get certain sectors of the market that are going to be performing well. Obviously, if Trump starts to lead, other sectors. And again, that's why you have that back and forth, which creates volatility and uncertainty. We also had, until further notice, a top in NVIDIA.
Right.
The biggest company in the world. It reported earnings. We talked about this ad nauseum. In fact, it was the subject of our written piece, One Step Towards Cautionville.
Yep.
Why? Looks pretty good in the rearview mirror. Why? The valuation. It was too steep. They had to keep. I watched pole jumping. What is it called? They jump over the pole. Pole vaulting. I watched it in the Olympics. They're set up to fail. You know that, right?
Yeah.
Like they're set up to fail because they keep raising the bar, and at some point they don't jump over it anymore, and the other guy wins. It's fascinating. It's the only sport that's like, oh, you failed, so now the other person wins. Very fascinating to me. Well, that was NVIDIA. NVIDIA was set up to fail. Candidly, they were so richly valued. I used to make a joke. They had to start selling chips to a new customer base found on Mars, right? To justify the valuation. Doesn't mean NVIDIA is going away. Not even close.
Yep.
Doesn't mean I would go out and short the stock. Absolutely not. What does it mean? It means it got ahead of itself.
Right.
Now it needs to reset. Now the question is, what happens to all those companies that bought those chips? I mean, you hear a lot of us talking about the concern we have, the volatility, the debt. That doesn't go away. But make no mistake, there's a tremendous amount of companies that have bought all those chips. They're implementing those chips and that software now. That's going to change the world. I was sitting with a friend the other day, runs a large conglomerate of restaurants. And we were talking about this, and he said, I don't get it. What are you talking about? I said, okay, let's say you invested in a new oven. He makes pizzas, okay? Just candidly. He makes pizzas. Won't disclose who it is, but you don't have to be a rocket scientist to know who it is. Okay. Makes pizzas. They got 20 or 30 stores across the country. I said, let's say you put a tremendous amount of money in this unbelievable oven. Makes better pizza, faster pizza, makes it without people. Now, originally, as all restaurants are doing, they're selling the ovens. The stock of the oven company is going gangbusters.
Right.
But pretty soon, everybody has the oven.
Right.
Well, now, what we want to know is, what's going to happen to that pizza company?
Yeah.
They bought the ovens. They've put them in. They've trained people how to use them. Now they're using them. And he goes, well, what if my profits went up considerably? I go, bingo. Exactly. He goes, yeah. And he's smart. He goes, yeah, but what if I cut staff to do it? I go, oh, that's going to be a dilemma. We're going to have that issue with AI. But the reality is, from an investor standpoint, there's going to be a heck of a lot of pizzerias implementing great ovens that I want to buy.
Right.
I want to find out who's going to be making the most money with those things and own those investments. And that's the next phase of this AI. So, volatility, bring it on. I mean, candidly, I'm not trying to be trite. I don't like seeing portfolios decline day 1 of September. But in my opinion, it's going to create the opportunities that we need to kind of go through the rest of the year and into 2025.
Yep.
Now, we're still watching the backdrop of debt. We're still watching the backdrop of the consumer stretched.
And jobs this Friday, too.
Starting to lose jobs. All those are concerning. We're watching all this. Kind of like when we're out at the ball field, the kids are playing, and they're like, hurry up, because I see those clouds way out there, right? Maybe they go by. Maybe it doesn't have anything. Happened at the game, right? UK game. Oh, what a nightmare that was. But anyways, those clouds roll in and start pouring. Well, we want to make sure we're off the field.
Right.
I'm just crushing the analogies today. Analogy. I don't know. That's all I got.
Anything else we need to be watching out for?
No, I mean, again, we're going into September. I think coming into the election, it's going to be volatile. We'll continue to do rebalancing accounts, et cetera. That's about it.
All right. Well, we hope you enjoyed this weekly review. Check out the newsletters that we're sending out each week as well. We'll talk to you soon.